The following is a presentation of TFNN. Live at TFNN, the Money Masters. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, the Money Masters.
Good day, Money Masters and Treasure Hunters. Welcome to the July 31st terrific Thursday edition of the Money Masters Show. I'm your host, Steve Rhodes, author of Mastering Probability, the daily newsletter service that is the intelligence for creating financial freedom. Hope everyone is off to a great start of their day. Let's make sure that you and I, that we do all that we can do to have a terrific Thursday. And welcome all our new listeners out there. Remember, check-in time here at the Hotel California at Tiger Financial News Network. It now is at 8 a.m. Our man John Logan kicks us off with the Global Market Pulse, followed up with a couple hours by me. I'd open things up at 9 a.m. with the Trader's Edge Show. That's archived on Channel 9. This hour here is archived on Channel 10. If you are listening on your radio, your mobile device at tfnn.mobi, don't forget, you can catch live stream of the show by going to the homepage of tfnn.com. Upper right-hand side, you'll see a little button, 3 little smartphones on it. Click on that. The show will stream live to you. That way you'll be able to see our charts. And, of course, if you're new to a new listener here to TFNN, don't forget we've got something called the Tiger's Den. It's a peer group of excellent traders, great trades, advice, and so forth. So you can give that a shot. You can test drive that for the next 30 days out there. I do that. It's a call-in talk show that we've got here. That means you can give me a call at 877-927-6648. Internationally, that number is 727-445-1044. During the next hour here, we'll go ahead and we'll use different tools to get an idea of where prices go. We'll look at Fibonacci expansions and retracements. We'll take a look at A to B equals CD, down and up patterns out there. And we'll take a look. We'll go find bulls and bears out there. We'll certainly take a look at areas of prior resistance and support levels. We'll utilize Japanese candlesticks to do that. So let's go kick off our day. It's terrific Thursday. This is Tiger Financial News Network. I'm Steve Rhodes, and welcome to the show right now. Dow is off 148 points. It's trading out at 16,732. S&P down 18 points. It's trading at 1951. NASDAQ off 48 points, trading at 44.14. Russell off 13 points at 11.33. NDX 100 off 44 points. It's trading at 39.32. Gold is back $9 right now, trading just above 12.86. Silver's off 8 cents. It's trading out at $20.51. Leading the charge, the upside here, dollar-wise, Vistaprint. Vistaprint, we took a look at it during the last hour, running right into an area of previous supply. So at this stage, nice gap up, a 24% move out there. It'll have to really maintain volume in order to overtake that supply line. You've got Open Text Corp, OTEX. That's up 15%, up $7 and change out here. You've got Bunge Limited, BG is the ticker symbol. That's up nearly 6%, up $4 and change. In fact, let's go take a look at Bunge, because we're going to take a look. Is there any chance that there's a bungee jump? Or has the cord actually snapped when we go take a look at the market? So if we take a look at Bunge, BG is the ticker symbol. Nice move up higher this morning. Big, wide-ranging bars, taking out resistance, in fact, trying to change its trend. But this, too, running into a area of supply. We'll see where it closes today. It's inside the gap. What I'm referring to is the trading session of April 30th to May 1st. There's a nice little gap out there. The top of the gap would be the low of April 30th. That price point is $79.35. And we can see that has been hit here this morning. Let me show you this. Let me just wipe a few things off of the screen here that we can always add back. So here's a clean chart. If we take a look at the where the communication breakdown was, if we take a look at where it actually broke down, that was that trading session on April 30th. The price level there of that gap, $79.35. You can see how price, actually the intra-session high so far has been $79.45. You had a number of shares that traded hands that day. May 1st, total of 3.5 million shares. You're up so far this morning with 799. So the volume is not too bad for 41 minutes of trading out here. But nonetheless, this is a area of resistance. And until you see it close above 79.35 out there, that will continue to act as a supply line. And that's where you really saw what has also been acting as support. You had this wide-ranging bar. What a wacky day this was here for this stock. BG is the ticker symbol, July 25th. It had opened up down. That is another earnings date, so that was an earnings date. Today's not an earnings date out there. It's not showing up on my screen as an earnings date. And that date actually opened up down at the 73.65 level, traded all the way up to 74.39. In fact, it closed almost at its session highs, then continued its move higher. So 79.35 is the level of resistance for Bunge. BG is the ticker symbol. You got McKesson Corp, supplier to all the Good Neighbor pharmacies and many others. They are not out with earnings as well, but it's taking on a swing point high out here. So it's up $4 and change. Let's see what, and this looks like, because this is at all-time highs, I believe. Yeah, most certainly is. So what we have, let me pull this back now. So we have with McKesson is the swing point that it's dealing with is just a couple days ago, July 25th. That high out there was 195.20. It's at 195.36. That had 632,000 shares. It's done 445 today. Pretty impressive looking out here. A to B equals CD patterns, large ones out here. This swing point from March 21st had a 1.7 million shares. That was overtaken with 1.8 million shares out here. So McKesson looking pretty darn good out here. As far as potential price patterns, let's just look at the smaller A to B equals CD that is forming out here, has formed. The A point I'm going to use is the low from April the 11th. That'll be our A point. Our B point is going to be the high that came in on June 3rd, and your C point is a pullback in at June 17th. So price projection for McKesson ought to take it up to about the 210 level, trading out right now at 195.20. All right, so let's go check out the markets. It was kind of like a little bit of a pause and delay there. I want to see how things would trade for the first 15 minutes or so of the show open. And we're going to switch down, and we're going to just kind of to dissect the market. We're going to go look at 30-minute time frame charts first. Give me a moment to pull this over here and see what kind of candles we've got forming, if anything. So we're looking at the NASDAQ. So we're looking at strength right now because the NASDAQ has really not done much in the way of falling apart. And then we're looking at a 30-minute chart out here just to get a feel for any potential change in trend, any bungee jump that might be going on inside of the market. So we're looking for any kind of snap back that could, in fact, take place. Now, we can see here on the 30-minute time frame for the NQ, we can see how price had moved lower. It had done it on less relative strength. Now, we do not have any kind of reversal in place as we speak right now, reversal signal. And what it would really take in order to suggest that there would be some kind of a snapback of any significance out here, the first thing that it would need to do from my standpoint is clear this candle session here from about 5 a.m. And that high is 39.49. So 39.49 would become the level that it would need to get above. And then you've got the NASDAQ, which would be the strength out there that might try to lift the tide higher. Short of that, short of that, what you're just seeing is a little bit of a work off of an oversold condition out there. So that's going on inside the strength. Now let's go take a look at the weakness out here. We'll look at all four for you. Let's go look at the weakness first. And by weakness, I'm referring to taking a look at the Dow. Same pattern here on a 30-minute time frame for the Dow. The level that I would need to see price close above to tell us that the bungee jump is starting to snap back out here would be a close above the 5 a.m. high as well. That's what I would use as my target area, 16,748. You're at 16,685 right now. No reversal signal or anything at that stage. So right now you have to assume that what's going on in the market is nothing more than a oversold condition that is being worked off. Let's go take a look at the other two out here. We'll take a look at the Russell 2000. I've got a 10-minute delay here, so my apologies there. But the Russell 2000, this is where the Russell 2000 is actually stronger than quite frankly, than the NQ as well as the Dow futures out here. Kind of interesting, isn't it? Because if you take a look at this swing that was put in at 5 a.m., you haven't seen a close below it. You've not seen it close below that level out there. Now, what does it take in order for the Russell 2000 to give us a signal of a bungee jump move higher? Well, we're going to still use that same 5 a.m. trading session on a 30-minute chart. Remember, we're looking at a 30-minute chart, so stay inside your time frames whenever you are trading out here, and it closed above on a 30-minute basis, 1135.50. That would be a signal of of maybe something more than just a bounce in the marketplace. Now, let's finish this off on the 30-minute time frame by going over and taking a look at the S&P contract, the S&P futures contract. Then we'll take a look at the ETFs and dailies, and you can see here price was moving lower with less relative weakness as well. And we're going to use a close above the 5 a.m. bar as well. Here, that's 1955.50. 1955.50, and says that the bungee jump would be snapping back. So that's utilizing a shorter term time frame out here. And when we get to the close, somebody remind me out there if I don't remind myself. That means in the very last segment, we'll go back and we'll take a look at these 30-minute charts and just see what information they are providing to us. Now, let's go take a look at what's going on inside of the ETF sectors out here. Many of you may not be following the futures contracts or have access to it on your trading platform, but you do have access to the ETF. So let's start off. We'll take a look. We'll start off with the Dow Diamonds out here. I mentioned this during the last segment out here. We want to pay attention to, let me turn this. We'll turn this off and turn it back on. It's just going to be a little bit easier to show you. So give me a moment here to adjust these settings on my dial out here. There we go. There we go. There we go. Okay, so we got a clean chart. Now, when we're taking a look at the Dow Diamonds, this is the area that I want you to focus on today, and it's right here. It's this candle that took place on the trading session of June 26th. That is a hammer candle. Hammer candles are very important levels of support or resistance once they get broken through. In this case here, we're looking at support. So we know right now, and volume-wise, it's not really a swing point, so I'm not so interested in using the volume as a volume characteristic because, you could say it's a swing point, but nothing of significance. The volume, by the way, on that trading session was 4 million shares. What has been done so far today? 2 million shares. So volume-wise, that's really not an issue here. So the real question is, can the Dow hold 167.06? If it does, it's actually a relatively strong message out there that's really where the bulls are camping out. If, in fact, you see it close below 167.06, now, look, I don't mean 167.05, but even 167.05 would qualify. But, we always like to see some conviction behind the move. Well, then, and as we take a look at the Dow Diamonds here, we're going to take a look at a couple of different things. Because the Dow, remember, during the move back in February, when the Dow Diamonds was making its lows, it was only just a retracement of the October low that was out there. It did also get below the, or actually, if you take a look at the April lows was just a small retracement, whereas like in the Russell 2000, it was a full retracement back to that level out here. But nonetheless, let's just take a look at a trend line out here. You'll see the trend has been broken. There's no question about that off of those February lows. However, well, here, I'll show you. You can see that, right? So clearly that trend has been broken. We get back from this first break. Let's go take a look at the larger trend, a little bit larger trend, I should say. That's the one that comes off of that October level. We'll take a look at the Dow Diamonds. If it breaks that hammer candle, where price is likely to travel to, 877-927-6648. Feel free to give me a call. We can look at your stock chart as well. We'll be right back, folks.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Wouldn't it be great if you could get a red light, green light indicator that gives you signals on 25 different future contracts? Now you can with Taz Signal Box. This red light, green light market profile system dynamically updates 24 hours a day and provides you with important trend and trade signals on 9 different commodities, 9 different indices, and 8 different currencies. Right now, you can receive a free 2-week trial to Taz Signal Box. For all the details and to find out how the Signal Box works, visit the front page of TFNN.com.
Andy Heck's powerful weekly newsletter, the Technomental Commodity Report, has delivered multiple triple-digit winning trades in recent months. And right now's the perfect time to get a full month-long trial to Andy's newsletter with no obligation to pay anything. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you'll lock in the low rate of only $59 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
You've always taken the long view when it comes to investing, but what if there's an opportunity right under your nose? What if you could be more responsive to market trends to seek to boost your portfolio performance right now while seeking to reduce your overall risk? At Direction Funds, we connect investors with alternative strategies that seek to maximize their returns. Smart investors deserve smart alternatives. Find yours at directionfunds.com. An investor should consider the investment objectives, risk charges, and expenses of Direction Funds carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Funds. To obtain a prospectus or summary prospectus, please contact the Direction Funds at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. Investing in index funds may be more volatile than investing in broadly diversified funds. Distributed by Rafferty Capital Markets, LLC.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back. We've got the Dow off about 133 right now. S&P down 16. Let's go out to a beautiful city way out west. Let's go speak with Larry in Cheyenne, Wyoming. Larry, thanks for calling in. Welcome to the show. How are you doing today?
Oh, real well, Steve. Thanks. And, yeah, it is beautiful out here. Steve, I got a specific question, and you go over it, and it's, for me, I laugh. It's my Harry Nielsen, everybody's talking at me moment, because every time you explain it, it just goes, it's just a blur. So it's about, and it's remedial, but
that's cool. Thanks for even calling in and asking. So let's take it one step at a time. So walk me through it, and it's the New York Stock Exchange specifically that you're looking at. Yeah,
I'm looking at New York Stock Exchange data, and I've got it right in my Thinkorswim. I've got dollar advance, dollar decline.
Okay.
And you, in a very authoritative way, will say, well, above here is going to be bullish for the market, but below here will be bearish. I don't get I've never understood what you're talking about. Now, I haven't netted them out.
Yes.
I haven't, I just have advance and decline listed, and right now, like, the advances are net change of from yesterday, they're down 798. And the declining volume is up 668. I mean, issues.
Issues, okay, not volume. So it's issues that you're looking at. Is that, okay.
Right. What? Okay, and I've got things to do to organize. I'll net these out. So right now we've got net roughly 130 less advancers than decliners. Is that a good statement?
Well, we're both apparently using different data. I mean, I can tell you what I'm seeing. First, let me answer your question with regard to what I'm seeing on my system, and the data from eSignal is excellent. Right now, what I show as we speak at this moment, I'm showing net New York Stock Exchange advancing issues, not net, but advancing issues of 356. I'm showing.
That's what I show.
Okay,
yes. Perfect.
And declining issues about 2567.
That's correct.
Okay,
yes,
excellent. Good. So we're about the same. So you've got net declining issues as we speak today of 2213.
Okay, hold on. Oh, that's where you... Wait a minute.
Just subtracting the...
I see. Yeah, I see. So the leading number is the declining issues, and if you net out the advancing, you get a smaller number of 20. Yeah, okay, whatever you said. Yeah, okay.
Yeah, so it's right now it's about 22. Obviously per tick it changes, and that is the declining issues. Now, So we're in sync there with regard to our data lining up, all right? And I'm taking a look at it on a daily basis as to what the advancing and what either net advancing, did the bulls take charge? Did they have more advancing issues than declining issues? Obviously, you can have unchanged too. And I'm utilizing that. That's a tool that's utilized. It's a part of the McClellan Summation Index.
Yes.
Now, the McClellan Summation Index is a excellent trend-based tool. And that's really where I'm using this data. So I'm going to put up on my screen the New York Stock Exchange for you. All right, and this is my chart. Now, when we take a look at the bottom of my chart out here, and I also take a look at volume. So, but right now we're just going to keep it to issues out here. And when we take a look at this data, the only way that I'm able to get this data is to I keep track of it on a spreadsheet, and I also then can import it into the system. That way I'm comfortable with the data that I'm looking at.
Yeah.
As we speak, so what happens when I'm looking at the very bottom of my chart, it's the price oscillator. And what happens with regard to advancing and declining issues out here is that when the price oscillator is above zero, it's presumed that the bulls will have control. Now, I'm just going to kind of give you the general summary so we're not dealing with more complicated issues. So when the price oscillator is above zero, the summation index will also tick up. And so we use the summation index as one trend-based tool. Now, in the second panel of my screen, so you've got the chart data up top, the very second panel of my screen, you can see that the summation index has been pointing down ever since about, I believe it was July 7th. Now, Larry, can you do me a favor and hold on through this break here so that we can, because I want to be able to put this together for you and answer it, so at least you can understand how I utilize the data. So we're going to be going to a hard break here in just a few seconds. So when we get back, we're going to go back out to Larry and Cheyenne. I really appreciate him calling in and trying to allow me to clear up some confusion that he has. And folks, there's always any question is a good question, so you too can get in line by giving us a call 877-927-6648. We get back, we'll go take a look at the New York Stock Exchange with Larry from Cheyenne, Wyoming. We'll be right back, folks.
Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
No matter where you listen to TFNN programming, we want you to know you can always access your favorite shows on demand through TFNN.com. TFNN airs live programming every market day from 9 a.m. till 6 p.m. Eastern, and you can view each program by accessing Tiger TV through our homepage. We even have an easy link for all mobile devices, including iPhones and iPads, located at the top right-hand corner of the TFNN homepage. You can use your smartphone to view Tiger TV, but if you don't have a mobile connection that can keep up with streaming live video, then you can simply visit TFNN.mobi in the browser of your smartphone for live streaming audio of all of our programs. The mission of TFNN is to educate our audience directly and interactively through our interactive website and radio call and talk shows. TFNN is able to teach all levels of investors the technical skills needed to trade in today's marketplace. In order to get the best information possible, TFNN has assembled the most respected financial minds in the country to provide the most current news and comprehensive advice available. TFNN.com. Educating investors. This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Welcome back, folks. Dow's off 162 right now. S&P down 22 points. NDX, NASDAQ composite off 60 points. Just starting to really kick in and lead the charge. We're going back out to Wyoming. We're talking with Larry, and we're taking a specifically look at the New York Stock Exchange. And his question was with regard to, I often refer to the net advancing issues or net declining issues with regard to the bulls or bears being able to take control of the market. Now, on my system, with the e-signal data, Larry, I'm able to type in a symbol, and you might want to give the folks at Thinkorswim a call, because they might just have a symbol that tells you what the net advancing minus declining issues are to give you that net figure.
Right.
Or so, and may I...
Steve, the same with the McClellan summation. I'll need their exact symbol, right? Yeah.
No, see, in that case there, I'm building it myself. Now, I have found software applications that try to build it as well, but it hasn't. What I have found in the past, it hasn't been accurate. And that's why I build it myself. So I have a spreadsheet that's got historical data, and that way it's reliable, because it helps me from a trending standpoint just to understand what's going on. But basically, when the summation index starts trending down, it is a trend-based tool out here, and the only way for it to get above zero line and tick up is for the price oscillator to get above zero. So, for example, today, as a matter of fact, if the New York Stock Exchange were to see, and I don't think this is going to be the case, but were to see more than 2,214 or more net advancing issues, the summation index would have ticked up. It still can happen. Anything can happen by the end of the day. And that would then say that the bears have just lost control of the ball out there. So I keep a cumulative day-by-day count on that, and that helps me to understand what's needed for the next trading session, because New York Stock Exchange is, it closes at, at 4 o'clock out there. Now,
so Steve, your
yes.
lowest pain, the third pain down, is just the netting out of the advanced decline in daily?
It's the price oscillator. It's a little bit more complicated than that, and it's a spreadsheet formula that I'm not going to be able to. That one.
You're
would,
a computer guy. I'm not, so you got an edge on me. But okay, I believe you.
So that's what it's doing. Now, what's interesting about the price oscillator here is that it's now what happened last evening was the price oscillator moved down to the minus 150 level. And when it moves down to the 150 level, it's when the New York Stock Exchange starts to get into a oversold condition. Now, as an example, the last time down here, when it got below 150, it happened to be the trading session of July 17th, and we saw the market bounce a bit. The prior time before that was the lows that were put in back in April. So April 11th, that price oscillator got down to exactly minus 150. Last night, by the way, it was at minus 163. And at minus 150 out here, when April 11th, that formed a bottom. If we go back a little bit further, the price oscillator got below 150, got to minus 200, which I would have to say, if today's action continues like that, that's what we're looking at today, is probably getting to that minus 200 level. That was back at the February lows out there. If you go back even a little bit further, when the price oscillator gets below 150, this would take you back now to the December 13th area when the market had made a low. If I go back a little bit further, when the price oscillator gets below the 150 level, it made 193, and then 173 on the trading sessions back in October of 2013. That too made a low. So do you see, your question is actually relatively timely. And with today's sell-off, another way to also use the data that I'm providing and why I keep track of it is because it helps me to understand where we're at, especially also from a historical perspective with regard to the wider swath of the marketplace. Now, that doesn't mean that things have to end here and that today ends up being a low, but it is something to absolutely pay attention to out here. If we see it get down into the levels of maybe like minus 300, minus 300 area, then you're about to make at least a really good counter trend rally. So that's how I use the data. But what I really want to know is, did I confuse you more, or did I help answer? Because I want to help answer.
I need a better overview. So with the advancing volume and declining volume associated with the price move, you do the same thing, only using a McClellan volume summation, and the lower is a volume oscillator. Is that what I'm hearing? Is that what you do?
I use both. The price oscillator that we're taking a look at is really just issues, so it's net issues that are out there. There is also a volume oscillator. Let me see. I can probably apply it to the chart.
I can't program stuff. I don't know. I don't have a clue. I just got a computer 8 years ago. I mean, how does a mortal guy like me make sense of? I mean, it really makes a lot of sense on your chart. I don't know how to do that. What do I do other than subscribe? But I mean,
I like that idea.
But I mean, is there So I can get a lot of information just knowing at some level when decliners are outstretching advancers in a general typical market that's your oversold point, really. And
not just there, but it's really where you've got to get to levels where the rubber band has been stretched. So it's so timely that you're actually calling today, knowing that yesterday's price oscillator dipped to the 150 level. I happen to include it in this morning's newsletter. I haven't touched base with regard to subscribers about the summation index over the for the past week or so, because I've been watching for it to potentially get down into that minus 150 area out there.
Okay,
so,
but it's fine. It's fine. It's all good because I'll just
the summation index is a cumulative.
Yeah, cumulative.
Yeah.
I'll just I can get a feel for what the market wants to do just with the continue with the patterns, and you look at the size of the candles, and you can get a similar information from a different way. I'll be fine. I just didn't understand how you were doing it, and now I realize it's your own special kind of genius at work.
Well, it's not my genius. It's following the mathematical formula that Sherman McClellan put together so many years back. So there's plenty of information available, on the internet, or you could give Tom McClellan a call.
Well, I've been at his site, and he does give it free. You just have to go there. Yeah, okay.
Yeah, so there's ways to get it. Look, Thinkorswim, it's a great trading application. I can't say for sure. I don't know because I haven't used. I don't know if they provide you with a price oscillator or a volume oscillator or the summation index. I just know that from the past that when I've used the actual data myself, I've gotten more accurate information out there. So Angie in the Den is saying that inside the Thinkorswim application, they do have that tool there. So I also gave a little pearl, which is watch for levels when the the best way to use the New York Stock Exchange is really when you get to those extremes, and when you get above plus 150 on the price oscillator, below 150 on the price oscillator, you're starting to get to an area where you should start to see some kind of low that's actually being formed out in the marketplace. That's the best way to use it.
All right. Well, Steve, what a teacher what a knowledgeable guy. All right. So I appreciate it, and I'm much less confused. Thank you.
Oh, good. Okay. And thanks so much for calling. Have a great day. Appreciate the call.
Bye-bye.
Absolutely. That was Larry in Cheyenne, Wyoming, and folks, when you listen, the thing for all of us during the 10 hours that we broadcast live here at TFNN is that for us, things get so natural when we're taking a look at a chart and we start utilizing terms or what have you, and you just kind of maybe you say to yourself, what the heck was that guy saying? Just like Larry was suggesting about me. And there's no better time to actually call in, because when you're confused about something, it means you're just about to learn something. All you got to do is just take a little action and then give us a call, and that's the easiest way to do it. So thanks again, Larry, for calling. I appreciate that. And I hope that also, Larry had a question. Maybe there are others out there that have that same question. I'm always happy to try to clear that up. Let's go down the street to Safety Harbor to Scott. Scott, thanks for calling. Thanks for holding. How you doing today?
Good. Thanks for your call on Silver Wheaton a few weeks ago.
Oh, okay.
I had my doubts, but I did get into it that day. I forget when it was now. I have to look up when I bought it. But I think it was like 19-something that day. Then as you know, it pushed up, and then now it dropped back, but it pushed up there to in 22-something is when I got out. So.
Well, that's great. Today you wanted to take a look at Apple, or
Apple,
was it Silver? Okay,
all right. The previous call was a little confusing to me, but I'm trying to digest it. But sometimes...
Well, one of the things that you could do, do you watch us on Tiger TV, or are you inside the den?
Yes.
Yeah, I'd go back and watch the replay of this show specifically, and watch the New York Stock Exchange, and kind of watch the bottom panel. And more importantly, the most important thing to do is, as I was sharing with Larry where the price oscillator was below that 150, and we went back on the left-hand side of the chart, and we took a look at lows that were actually being formed when the price oscillator moved below there. If you go back to the sentiment at that time, when people's belief about what was going on inside the market back in April, when the market was making a low, people would be, no way, wasn't going to happen. But the reality was the price oscillator was giving us the summation. Well, it really was the price oscillator that was giving us the indication that a low was being formed. And it was the same thing back in February, and it was the same thing back in October of 2013, and it was the same thing back in the August 2013 timeframe. So I would just
suggest... What's weird is how the news will fall into the charts and vice versa. It's just this strange. It's like, well, something just came out, and there's no way that, let's say Apple, the chart says Apple's going to do this, but such and such a new phone came out. Well, I'll be darned, like 2 weeks later, the CEO of Apple falls off something, and it does go down. It's, you know what I'm saying? It's just strange. The charts, the news.
Well, that's the key. I think you hit on a great point, and somebody always knows something. And what we do is we just follow the charts, because that somebody's usually going to be in the price discovery or the patterns that are going inside of the charts out there.
That's a whole other subject about inside trading. I mean, when I first got into this, I'm thinking, if there's no such thing as inside trading, why is this stock spiking like 2 months ago, and now I'm just getting the news about some new biotech or whatever, merger or whatever. It's just very strange, but you see that all the time, you know.
Yeah. Well, on Apple, let's get to your specific question because maybe somebody has it as well. So tell me
I have a technical question first that maybe you can answer. On Yahoo Charts, right, it shows Apple back for 6 months, and it shows it back into like the $70 range and stuff. Well, it didn't exist at that time at that price.
Yeah, it was the reverse stock split that took place.
But how can they...
To adjust the chart, so even on my chart here that we're taking a look at, in order for us to be able to provide you with any kind of technical analysis and take a look at historical data.
In the translation, is the translation accurate?
It is. Well, I can't tell you about Yahoo Charts. The translation is accurate when I take a look at the charting tools on eSignal or Ensign Windows or NinjaTrader. I can't answer Yahoo Charts because I don't see. It's all about the data. So I have 3 charting packages, but they're all fed by the reliable data service, and that's with regard to eSignal. I don't have any reason to believe the Yahoo Charts is not accurate, but I can't answer that question for you. But what I can tell you is what you're seeing there is you're seeing the reverse split that took place or you're seeing the split that took place inside of Apple, and that's great, and I'm grateful that charting package are able to account for that. That way, we're able to provide you with some kind of technical analysis, so everything gets adjusted, and it becomes very helpful. And in the case of Apple here right now, if you just multiply the price times 7 as far as where we're at, you're almost really back at that 700. So Apple is back at its highs for sure, before it had fallen off of the freight train. Right now, Apple's trading at $96.35. It started a new market profile today and says that the low here of 96.01 ought to hold. Now, it's pulled back today.
I'm looking for an entry point is what I'm looking for.
Yeah. The entry point. So it's pulled back today with a volume of 17 million shares. The last low out here had 57 million shares. That's on July 17th. I think that what you want to do here is ideally you would time any long positions with a reversal in the market. You see, I can't rule out at this stage here that the next bottom that forms is just really a counter trend rally at this stage. But I would say you're better off from a trading standpoint when you can trade in the direction of the market. So I just need to see what I'd really like to see. I'll answer your question here with regard to Apple. If you're looking for an entry point, your entry point is going to come when the Qs trade to the downside, and today would be one possibility, when they trade to the downside with volume on a daily basis of probably around 75 million shares or so. So right now we've been trading for an hour and about 20 minutes. We've got 13 million shares that have traded hands. If I just multiply that times 6, that gets me to about 78 million shares. So if today you see the Qs trade with 70, 75, 80 million shares. You combine that with what we just took a look at inside the New York Stock Exchange, with Apple being the leader percentage-wise inside of the Qs. If Apple can hold this 96.01 level, that might be the buy signal out there.
So anywhere between 96 and 96.25?
I'd say let's first get the market right. Let's first see a reversal in the market, and then you can take a look at the Qs. So hold on through the break here, Scott. We'll be right back with Scott. 877-927-6648.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's Nadex.com. or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy, a set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
Catch Basil Chapman as he uses his Chapman Wave methodology to call the markets. The Tiger Technicians Hour, next on TFNN.
Welcome back, folks. Dow's off 164 right now. S&P is down 23. We're going to go back out to Scott in Safety Harbor. We're taking a look at Apple, and Scott's question was, hey, where's a good place to get in? So let's take a look at what Apple is doing here today. Number one, Scott, we know that Apple's trading lower. It's got 18 million shares in it, so it's got some volume that's accelerating to the downside, and it's trading into its most recent sign of strength. There's a little gap out here, and that's going to be the first place that you're going to be able to, from a technical standpoint, measure what Apple may be doing out here. And that's at a price level of the low of July 23rd. And that price is $65.79. That ought to be the first level of support. The second level of support inside Apple is at the, grab the right tool out here, is at the top of the gap. That's at 94.72. Now, if price is coming back into that area with more than 92 million shares, and it's really coming back with, you'd have to say, if it touches or closes inside 95.28, and it's doing that with more than 57 million shares, there's a pretty good chance that Apple would want to go down and test the low, 92.57. And that's what that's just taking a look at swing point analysis. The last time we saw a breakout in levels of support or resistance. And those are the areas that you would be watching for. I wouldn't try to step in front and put an advanced order in buy at those levels. You'd want to really see how today plays off. If we see large volume. Inside, if we see volume continue to pick up, and we take a look at a real scary day, a real scary bottom that's forming, and the Qs have got 75 million or more shares, 75 million or more shares, putting that combined with the New York Stock Exchange, the McClellan Summation Index, but mostly the price oscillator out there, it says we're very close to or at another bottom out there. That's my read at the moment. And I'll change my read as as I get more and more information out there. But that's how I'm looking at what's going on inside of the market. So,
Steve, one question not related to that, but somewhat. Do you keep stocks in the stable, so to speak? Do you keep specific stocks around? I mean, like with me, I like to keep Apple around, Google, Gilead, a couple things like that, and maybe an oil. Or do you just trade, and you're not in love with anything, you're just in and out of it and gone?
Well, it depends. From a longer-term standpoint, the answer is yes. So from, your retirement accounts or what have you, you should always be looking at more of the longer-term trades that are out there. From what it is that we do on the radio show, what it is that I primarily take a look at in the newsletter, it's providing enough information for people to manage their longer-term funds, because there you got 70% of the folks are really, making check boxes with regard to being long specific indices or, versus individual stocks that are out there.
Do you think those are a good couple to keep around, Google and Apple?
I think it depends on your long-term horizon, when you got in, and all those kinds of things out there.
Right.
So you got to always stay inside the time frame, and so it was as somebody in the den had pointed out. I didn't take a necessarily look at it, but they were mentioning, hey, here was your entry point. Somebody said on April 23rd. I don't know if I haven't really investigated that or not, but so from a shorter-term standpoint, I'm just how I read Apple is really with regard to the information that I was able to pass on.
It seems so strange to me, from a totally novice standpoint, and I guess more of a not a technical or fundamental, but when you see something like Priceline, which is half $1,000, and then Google's the same. Google should be $5,000. Buffalo Wild Wings, and all those crazy companies. You know what I'm saying? It just seems where Google is just ubiquitous everywhere and everything. It just seems like it should cost.
Well, Scott, my apology. We're going into a real heartbreak at the end of the show. So thanks so much for calling. I appreciate it. Hey, folks, stay tuned. 10 hours of live programming for the rest of the day, except Basil will not be with us today, so they're going to replay John Logan's 8 to 9 a.m. show. Have a great Thursday, folks.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This is TFNN.